Here's the interesting thing. Everything's on fire, right? Bitcoin's on fire, Ethereum's on fire, Chainlink's on fire, Solana's on fire.
Hey everyone, welcome to our latest TDR Trade to Black podcast. I'm your host, Shad Dales. Today we are talking crypto and what last few weeks and months it's been for this industry. Rumors that the SEC may pass BlackRock's ETF at some point in 2024, as 2024 is shaping up to be a very positive year. Do you believe in that? Well, let's find this out as we welcome back a very smart person in the crypto space back to the podcast. He is the CEO of Morgan Creek Capital and the managing partner of Morgan Creek Digital and American investor and hedge fund manager Mark Yusko back to the podcast. Good to see you. It's been a few months, but man, this industry has definitely changed for the better since the last time we spoke.
Everything's on fire. Look, great to be back with y'all, and especially during football season where we get to talk football too. Yeah. But a great year for those Seminoles, man, just looking good. So, here's the interesting thing. Everything's on fire, right? Bitcoin's on fire, Ethereum's on fire, Chainlink's on fire, Solana's on fire. By the way, I'm taking full credit for the Solana pump. This is actually a funny story. So a few months ago, I, on a podcast, said that, they asked me, what do you think about Solana? And I said, well, I made a lot of money in Solana early on. We were very early investors, courtesy of Multicoin Capital. Like we weren't the geniuses, but we invested in Multicoin and they made us a lot of money in Solana. And we sold most of it, but not all of it, but most of it, because of the problems they had, right? They had some problems with the usage and outages. And I said that, my issue is that transactions vaporized.
Yep.
And oh my God, the community went crazy. They're like attacking me on Twitter. What are you don't know? We never rolled back. I said, I never said you rolled back a transaction. Yeah. What I said was because of the outages, people would put in a transaction and it would never occur.
Yeah, the network's just
I say vaporized, whatever you want to call it. The transaction didn't happen. Well, you could re-put it back in. I'm like, well, but that's not my job, right? I'm not supposed to monitor whether or not your network is working or not. But I said, look, I'm open to be convinced that things have changed.
Yeah.
And this very nice guy from the Netherlands said, I'm in. Let's set up a Zoom. So we set up a Zoom and he walked me through a bunch of things. Said, we fixed this, we fixed that. And let me show you some stuff. He actually bought me markyusko.sol, which was kind of cool. And, but since that day, literally straight up since that day. So I'm taking full credit.
Are you buying in? Are you buying into what we saw with like Marinade with like the massive spike in TVL like 3 weeks ago? I mean, do you think DeFi on Sol it's got staying power? You think it's kind of like the flavor of the week? We got some yield farmers in, and then you'll start to see it kind of churn out.
It's too soon to tell. Are they making progress?
Yeah,
absolutely.
Yeah.
Are builders building? I was just talking to a guy earlier today who was at Breakpoint. Mm-hmm. And, Breakpoint 2 years ago, that was the top, right? I could have told you it was the top, right? I mean, you spend $1 million on the after party.
Yeah.
That's a bad sign. That's a bad sign. I don't care what industry you are. And I can go back industry after industry after industry. You spend $1 million at the after party for whatever it is, gold miners.
We've done it in cannabis. I've done it in cannabis. We were sitting at a dinner and we're all looking at each other. And one of the guys is an older gentleman than me, but he's actually gave me my first check to invest. He goes, Anthony, this is the top. And it was.
Yeah. And it always is. And it's because
did you believe him?
It's easy at the top, right? Everyone's feeling rich, everybody's feeling flush. Yeah. And so Breakpoint 2 years was the top. But he said this Breakpoint was heads down, serious people. And I had the same experience. I went to Permissionless, right? The ETH conference. And it was 20% of 2 years ago, easy. But the only people left were serious. And I had more good meetings. And then I went to Phil Vegas, the Filecoin meeting.
Mm-hmm. Yeah.
Even smaller, like maybe 10% of the people. Because that thing went from 200 to 3.
Yeah.
But the people I met were amazing. They were real builders doing real things, not just engagement farming or yield farming or selling the founder liquidity on the masses. So that is what happens at the bottom of every bear market in every industry. I tell the story all the time. In 1994, right after the the big recession back in 94. Most people who listen to this weren't even alive. No, I'm just kidding. And I'm just old. And it was interesting. There was this guy, and he got laid off at Bell Labs.
Yeah.
Okay. And he said, hey, I want to take my project with me. And the bosses are like, dude, we have no idea what dense wave multiplexing is. So yeah, you knock yourself out. Take all the intellectual property. It's yours. So he goes all over Silicon Valley. No one will back him. I said, that's a stupid idea. And his idea was fiber optic cable, right? White light takes a certain amount of capacity. So I'm going to shine the light through a prism. I'm going to break it into 8 colors, and it'll carry 8 times as much volume. And like, that won't work.
Yeah.
It worked. But no one would fund him. His retired 3rd grade teacher put her life savings, which was not the best decision in the world. Let's be honest.
Yeah.
Okay. $300,000 turned into 300 million.
Wow.
Because it turned out to be Sienna, which is one of the big networking companies of all time. Because it does work. And it actually went to 256. They could increase the capacity of fiber optic cables by 256x.
Okay.
Okay. But he got laid off. And so now we just had 650,000 tech workers laid off.
650,000?
That's a lot.
Wow.
That's a lot.
That's a lot.
And it turns out not all of them are just going to lie on the couch and do nothing.
No,
right.
They're builders.
Some of them are builders, right?
Yep.
And they're really good.
Yeah.
And okay, not all of them are going to build the next AI startup. I'm so tired of AI right now. It's like a 68-year overnight success story.
Yeah. Speaking of AI, I mean, I know that you're heavily ingrained in the blockchain space. Are you starting to see venture capital come back in and like actual capital inflows and valuations starting to get like a floor baked into them?
100%. So look, we are venture capital investors that invest in the ABCDs of the digital age: AI, blockchain, chips, and data.
Okay.
Yeah.
At the end of the day, it's all about the data, right?
Yeah.
Data is the new oil. Data is everything. And how you capture it, organize it, analyze it, and act on it is what matters.
Yeah. That's a great
So
step.
what is a blockchain, right? It is a way to capture and organize data.
Yeah.
What is a chip? It's a way to process and analyze data. What is an AI? It's a way to make decisions based on data. So all of this are about data companies. And there's this great quote from Eric Schmidt, knows stuff about tech. And he said in 2010 that since the beginning of time, which is a little bit of hyperbole because computers didn't exist for thousands of years, but fine. From the beginning of time to then, there were 5 exabytes of data. Today, as we're talking, 329 exabytes of data will be created.
I was going to say, is it that
today.
much?
Yeah.
And so the ability to capture it, process it, analyze it, secure it, all of that is what the future is. And AI, I say 68-year overnight success story, the term was coined in 1955.
What do you mean?
1980 was the year of AI by Time Magazine.
1990, did you say?
1980.
1980.
2000, Intel went up 20 times because their chip was going to power the AI revolution.
Okay.
Stock's down 75%. NVIDIA's up a lot because it turns out it wasn't their chip. It was someone else's chip. But innovation doesn't happen instantaneously. It's iterative.
Over time.
There are fits and starts. And
that's interesting.
And we build on the success of others. Like Sir Isaac Newton said, I'm not a genius. I stand on the shoulders of giants.
Yeah.
Now, he was a genius. He's underselling. But it's like when Lou Holtz says he's not a good football coach. I'm like, yeah, you're pretty good.
So do you think blockchain we're on a collision course with AI?
Oh, anyway, so the answer to the question, is money coming back in blockchain?
Yeah.
So there's way too much money going into AI.
Yes.
Stupid numbers, stupid valuations.
It's blockchain. It's like blockchain 2019 or 2018.
This is the 1-year anniversary. This is the 1-year anniversary of FTX.
Yeah.
Or 2 days ago. It's the 1-year anniversary of FTX closing. And that's the 2-year anniversary of them getting funded at a $32 billion valuation.
Yeah.
Okay. Ridiculous. Yeah. I mean, one of the dumbest. Now, these are smart guys. I mean, I would never call Sequoia dumb.
No.
That was a dumb decision to invest at 32 billion in FTX for lots of reasons. But the point is, the mania was so crazy, and the amount of money. And Keith Raboy, famous venture guy down in Florida, he said it best. He said, "Look, we've all lost our minds.
Yeah.
But you go first.
Right.
You skip this hot deal because you think the valuation is too high. And by the way, I'm taking your capacity when you do."
Right.
So we all, ourselves included, we made stupid investments. And I shouldn't say that out loud, but we did. We convinced ourselves that the growth was enough to validate the valuations. And it's because there was too much money chasing too few deals.
That's it.
And growth was skewed because we were living in the new abnormal. We were living still in the zero interest rate world where capital misallocation just happened too frequently. So to answer your question, today, as I sit here, too much money going into AI. I'm not really focused there. Blockchain, unbelievable opportunity. We're seeing the best deals we've seen in years because the talent is great and the valuations are right. Chips, we're going to make so much money in chips. I mean, the level of iterative progress in chips over the next decade, it's incomprehensible.
Now, from a venture perspective, are there actual opportunities in chips, or is that value creation also more so siloed to the big
We're invested in. I'll tell you this much. So, it's an unfortunate name. I mean, the name is kind of weird. FHE, fully homomorphic encryption.
Okay.
So it just has a weird sound to the, it's just one of those words that just.
I trust the builders. I trust the builders that are confident enough to go to market with that name.
I'll tell you what. So FHE is what we call it. But this type of encryption. So you think about it. If we all have these, and if the stuff is on our phone, it's encrypted.
Yeah.
Right.
If I send it to you on WhatsApp or Telegram or Signal, it's encrypted. If I use iMessage, not encrypted.
Yeah.
Once we take our data and put it up in the cloud, like we just migrated to Windows 365, so my data's up in the cloud. If it's sitting there idle, it's encrypted. But every time I go to work on it, they have to decrypt it, and that's where all the data breaches happen.
Right.
These guys, so these two companies we've invested in, believe, no, it's their belief, and we'll see if it works, but they believe they have a chip design that does so many processes a second that it can keep the data encrypted and allow you to operate on it.
Okay.
How does that work?
Exactly. It works the same way that the fact that you and I are talking in real time in HD.
So essentially there's no vulnerability via data transfer. They're kind of solving for that gap.
If you think about the cloud today and all the vulnerabilities, but all the billions and billions and billions that have been made, every one of those servers would be obsolete.
Yeah, correct.
You're right.
Right? Every single one. And I'm not saying that's going to happen.
Yeah.
But if it does,
good bet.
If this technology works, that's a big deal. And that's what venture capital is all about. See, venture capital is not about
how many times
not the Ichiro of to switch sports. It's not about Ichiro.
Yeah.
It's not about slapping singles. It's about home runs and strikeouts. And one of my favorite lines, and it's back to the old days of sports, right? Babe Ruth, press conference, whiskey, cigarette.
Yeah.
They're asking him questions. And he just went 0 for 4 strikeouts. Said, "Babe, tough night tonight. How you feeling?" "Oh, I'm feeling great." And like, "What do you mean? You struck out 4 times." "I'm not much closer to the next home run."
Correct.
Smart.
Yeah.
Just math. Correct. He said, "I'm going to strike out this many times. I'm going to hit this many home runs. If I just struck out 4 times, I'm going to hit a bunch of home runs."
Yeah.
And he's right.
Yeah.
And so what people forget, it's funny. So I say it all the time. We invest in 30 companies per fund.
Yeah.
And I say we follow on in 20. And I make the joke, which is not that funny, but I say, and I wish I knew which 10 to avoid before we made the investment, but I don't.
Yeah.
And that's the point.
I'm sure AI will be able to tell you sooner or later. You'll be able to
throw
all the pitch decks in and be like, give me the corollaries.
Some people get angry. They're like, no, you shouldn't lose money. Like, no. If you're in a venture fund that doesn't lose money,
you're full of shit.
You're never going to make any money.
Yeah.
Right.
Because the way you make money in venture is not in the middle of the distribution. It's on the tails.
Mm-hmm.
Yeah.
You got to have the risk of total loss in order to have the potential of 10x, 20x, 50x, 100x gain. And that's not promissory. I'm not saying that this technology that these guys are doing, FHE, is going to work. But if it does, our little bit of money is going to turn into a lot of money.
Yeah.
And the people who come in later, when it's de-risked, they'll still make money, but they'll make less money.
Yep.
And that's how early stage versus late stage versus growth equity versus buyouts. Like if you're doing buyouts, you better not lose money.
No.
Because you don't have enough home runs to make up for the strikeouts. You better hit singles and doubles all the time.
Yeah, good point.
Speaking about innovate, or go ahead, Chad.
I was going to say, like, some of the best lessons in life are the mistakes that you make. And, it's, I can't help but think, like, we sit here and we're 12 months, FTX, it looked like this industry was turned upside down. Anthony and I were in New York talking to Kevin O'Leary about a year ago, and it just was, I think he was ready for a Christmas break. Like 2022 was a challenging year to say the least for him. But it's amazing how much this industry, I don't think it was an FTX problem. It was an SBF problem, but it's amazing how this whole industry has been flipped in just a short period of time in only 12 months. But what have we learned through all this that happened 12 months ago to where we are now? Because it had to happen. It has happened. We learned
that humans are going to human.
Yeah.
Right? Bad people have been doing bad things since the beginning of time.
Yeah.
Every innovation in the history of mankind has had the early people come, the scammers, who have no ability to create anything, but they see an opportunity and they try to make money around it. Right? Think about the people in the gold rush. Okay? In the 1860s, who got rich? The gold miners? Nope. They shot each other trying to jump claims, and they starved to death and froze to death. And a couple of them found big nuggets and got rich, but very small number. How about the guys who went to San Francisco, or actually it was called Yerba Buena back then, who went to Yerba Buena and they were selling the fake maps? They got rich until they got arrested or killed or shot, right? Because the first time you sold a fake map to a big guy who went out and realized it, he came back and found you.
Yeah.
Bad things happen to you, right? And now that guy may have died on the way because you sent him to a bad spot. But who got rich? Sam Brannan. Who was Sam Brannan? Sam Brannan owned the general store in Yerba Buena, and he literally bought up every pot and pan and pick and shovel, and he would go down the main street on whatever that main street is in San Francisco, banging a pot saying there's gold in the American River. And come buy, $6 eggs from me.
Yeah.
Right.
Think about that. $6 in 1896. That was a lot of money.
That's a lot of money.
And
$6 in 1896 would be a lot of money.
Oh, a lot of money. A lot of money for an egg, for a single egg. And he became the first California millionaire.
Wow.
And he sold picks and shovels. So what I do, I'm a picks and shovels guy. I like to invest in picks and shovels. And ultimately what we learned in the past year is humans are going to human. You're right. It's not a crypto problem.
Yeah.
FTX didn't fail because crypto failed.
Yeah.
FTX didn't fail because Bitcoin failed. FTX didn't fail because blockchain failed. FTX failed because Sam Bankman-Fried is a criminal.
Yeah.
Yes.
He's a bad person doing bad things.
Yes.
It has nothing to do with crypto, has nothing to do with blockchain, has nothing to do with Bitcoin. It has to do with a person who stole money from clients.
And because a lot of people don't understand the space enough, perception is what superseded everything. And therefore, people were skeptical and everything ensued for the next couple of weeks, if not months. But, to your guys' point, like this looks to be like an incredible turnaround for the actual industry as we head into 2024.
Well, look, we've been talking, and we've talked about it together, that I came up with this theory. And it's really a theory. I say it's a theory of my life story. And I don't mean that in a braggadocious way. It's just I got lucky. My life is a series of happy accidents. I didn't plan to be a venture capitalist at 60 years old. I didn't plan to be, a hedge fund guy earlier in my career. I didn't plan to be a university guy. I didn't plan to be an insurance guy. Just life's a series of happy accidents. But I lived this theory, which is my dad, right, grew up in the 50s when this thing called the mainframe computer was invented in, Boston, Route 128. And he went to work for this company that sold and installed mainframe computers. Okay. Made a good living for us and the family. And then it went from mainframe computers to microcomputers, the computer chip in 1968, right after I was 5 years old, and the computer chip was born. And they started installing VAX computers, mini computers, not as big as a building, but still pretty big as a room. And we moved to Seattle, and I grew up in Seattle, and there's this little thing called the personal computer that got invented in 1982. And I just graduated from high school, and I was off at college at Notre Dame, and this little company called Microsoft. And I was just, many of my friends don't work anymore because they were smart enough to go to work there. And C. Ballmer's mom famously said, "Honey, why would you work at that company? No one would want a computer in their house." Who was she quoting? She was quoting the CEO of DEC, Digital Equipment Corp., who sold mainframes, who said no one would want a computer in their house. 20 years later, DEC got bought by Compaq.
Wow.
It's such classic irony.
Yeah.
And so turns out Steve Ballmer's got 18 billion reasons he was right, mom was wrong. And then 14 years later, I'm at Notre Dame working at my alma mater, and I get a chance to invest in this little company called Google. And our board literally laughed. They're like, "That's a dumb name." I'm like, "It's a verb now."
I remember that.
But it was a dumb name at the time. And they were the 21st search engine. Why do we need another one? There's Alta Vista, and there's Web Crawler, and there's Ask Jeeves. They're perfectly fine. No, they weren't fine because they didn't do search the way Google does search. Google owns half of the websites in the world.
Yeah.
It's just an amazing stat. And so every time you type a question, it sends you to a website that has all the answers because someone else has asked that question. It turns out there aren't that many questions in the world.
Yeah.
And if you actually come up with a new one, a new innovative question, they'll create a new website with more information. And so they invented, indexation. So 14 years later, there's this innovation around this thing, right? 2007, actually before 2010, but 2007, the iPhone comes out.
Yeah.
And Apple stock went down 40% in 3 weeks. Because people said, "I will never pay $500 for a phone. My flip phone is perfectly good. My Nokia, my Motorola." Anyone have a Nokia phone? Anyone have a Motorola phone? No.
Remember those razors back in like 06?
I'll never forget. It was July. The iPhone came out July 2006. I was at the mall. I was standing in line, and I look around, and there's people going crazy. The day after the market opened, I went and bought a whack of Apple stock, and I have never sold it to this day.
Amen for you. That's amazing.
Did you really?
I still have it. Yep. My grandmother, when she died, left me AT&T stock that I had forever. And I literally went home and I go, "You know what? I'm selling all the AT&T stock, buying Apple stock, and I have not touched it to this day. I won't touch it. It's just sitting there. I wish I did it with Bitcoin,
that's amazing.
But I did it with Apple stock.
No, that's awesome.
Yeah.
That's awesome. And that is the way you do it, right? You don't try to time the market. You say, "This is big." I'm looking around.
I remember looking around and like people are like losing their shit for this phone. Like they're standing in line, they're like buzzing about it, and there was so much hype. I was like, "You know what? This makes sense." And then,
well, the more impressive thing is you were underwater 40%. A few weeks later, and you didn't sell.
Yep.
And what's interesting about that is you could have sold. My experience of that is in the subprime crisis, we made a big bet. And it's actually why I'm sitting here talking to you. We became kind of semi-famous in 2007 and 8 because we put 10% of client assets short subprime. But the first month we did it, was February of 2006. And if you've seen the movie,
that was when the rating agencies were refusing to budge. Yeah,
exactly. Yeah, exactly. We were down 40%.
Yeah,
but we were down 40.
That's where Michael Burry in the movie is just marking everything off, just down, 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 down. He's like, this doesn't make sense. Exactly. Yeah,
and we were up 550% by the end of the year.
Yeah.
Wow.
But we were down 40%, but we couldn't sell because we had invested in Paulson and it was locked up. And we did Paulson, we did Kyle Bass, we did John Burbank, we did Phil Falcone and a couple others. And look, it's a big bet.
Yeah.
And look, the key to life is in investing is making a bet that's contrary to popular opinion and being right.
Yeah.
The second part is the hard part, being right.
Yeah.
And I wouldn't tell a story if I was wrong, and we've been wrong a lot. We've been wrong a lot about, but that one worked. And it's funny because, we launched in 2004 and, I had backing from my mentor, Julian Robertson. And when people would leave his shop, they'd say, Julian, do you have any advice? And he'd say, yeah, make sure the first 2 years you get lucky.
Yeah.
Like, okay, that's good advice. Hard to follow. Yeah. Like, how do we get lucky? And we didn't get lucky till year 3. And I remember in year 2 going, what the hell did we do?
Yeah.
Like, we're not growing. Our ideas aren't working out. We were early. That's a euphemism for wrong. And then it all turned around when we made the bet. So, and it's funny, it is a funny story why we made the bet. So we had a client, super rich guy. He was the founder of J. Crew. He had sold the business and he calls us up one day and he lived in Incline Village, Nevada.
Yeah.
It's where people go for tax haven if you don't want to pay taxes in California. And he was madder than a wet hen that day. And this guy, 83 years old, quoted Sartre, fit, just amazing guy. And Arthur, look, you got the best life in the world. What are you upset about? Just, I deserve to live here. I'm like, well, of course you do, Arthur. What are you talking about? He says, well, average home price in this neighborhood is $11 million. Kids on either side of me, 35, young kids. There's no way they can afford this. You find me a way to get short.
Really?
A way to get short.
Oh,
wow.
Okay.
Mark, you're a
now,
heck of a storyteller.
did you actually have to do like what they did, going to like Deutsche Bank and Goldman and being like, guys, here's my thesis, print me the instrument, like with the CDSs?
We were one step below. Okay. So we were the ones investing in those guys who were going to create the instruments.
Got it.
And so we backed the the John Paulsons and the John Burbanks and it was amazing. And it's funny because look, it's one trade and like you're only as good as your last trade.
Yeah.
Right.
And you said something, Shad, which Shad.
Yep.
Yeah, Shad. That because I was with a Shane last week. I'm like, no, it is Shad. You said something that we learn from our mistakes.
Yeah.
And it's so true. When you make money, you don't learn anything. You just pat yourself on the back. Oh, look how smart I am. And I have this buddy manager. He lives out in San Francisco, and he's run this hedge fund called Route One, Bill Duhamel. And you walk in his office, and he's got this paper sign, printed out on probably a dot matrix printer, so old. And it says, with every investment, we get richer or wiser, never both.
Yeah.
And that is fact.
Richer or wiser, but never
both.
That actually makes a lot of sense.
When you get richer, you're like, oh, I'm so damn smart. And you never analyze it. You don't think about what process did I go through? How do I repeat those steps? How do I do it again? You just, hey, I'm great. When you get it wrong and you lose money, you're like, what the hell did I do wrong? I gotta figure this out. I gotta make sure I don't do it again. I gotta learn. And you learn. And the thing it's my personal pet peeve is the education system.
Yeah.
It's why I have a little foundation that I set up when I set up Morgan Creek, and we take 10% of our profits and we invest in early childhood education because our system's so broken, right? It was designed in the 1800s to create factory workers. We don't need factory workers anymore.
We need
knowledge.
Think for themselves. Yeah.
We need people who can think, who can reason, who can be creative. And we don't need people who can sit in a square and put on plastic parts on a machine. Yeah. So, but my personal pet peeve is not only are we teaching the wrong skills, and we're not teaching people to think creatively and independently, but we're teaching people not to take risk.
Correct.
Right.
We don't let our kids fail. We don't encourage failure. And I'll give you two examples. So I live in the People's Republic of Chapel Hill, right? And I'm reminded of that every election season when you look at the ballots and you're like, oh my God, this is socialism. And I love Chapel Hill. It's a great town, but the politics are not good. And in kids soccer, they don't keep score.
What?
Well, why? well, someone might lose.
I can get you on this.
No way.
Why you play the damn game. That's why you play the game.
Yeah.
And the true story is my son, when he was 4, they went 0-10. And they all got their little medal. And we got home, and the medal went in the trash. And my wife's like, well, what are you doing? Like, you do not get a medal for 0-10. Nope. 0 medals for 0-10.
There.
And
Mark, let me ask you something, Mark. Yeah. They always say it takes 3 generations to kill a business. Do you think that's where we are in society right now? When we look at, is this the growing pains? What's that?
Oh God, that, the thing, it's so funny. They say, someone told me once that, actually it was Scott Melker, who's a good buddy. He said, what makes a great podcast is you get good guests and you listen to them talk. Like, nope. What makes a great podcast, not a good podcast, but a great podcast, is one where the hosts ask good questions because they prepared, but more importantly, they listen to the answers.
Yeah.
And then they ask better follow-up questions, which you just did.
Yeah.
That question is the seminal question, right? There's a reason that shirt sleeves to shirt sleeves in 3 generation exists in 46 languages, right? It's not just English, 46 different languages. And my favorite is in Hindi. It's grandfather rode an elephant. I can't speak Hindi, but grandfather rode an elephant, father rides a horse, and son rides a burro. And that, it takes 3 generations to forget. It's why the 90-year cycle exists.
Yeah.
And we are at the 4th turning. And there's this book, The 4th
It's actually
turning.
that's a really good book too.
No, it's a great book. Yeah. And we are there. And the next generation, these generation alphas, they're going to be the equivalent of the silent generation. They're going to be the next great generation. And that's a big burden to place on them. Like, you're going to be great, right? Well, but they are. And it's not because they're different. They're human. They're just humans. But they're coming into a sequence of events that sets the stage for them to be great. And that's very exciting. And that's why, I say I'm having more fun today than I've ever had.
That's amazing. I love the saying they put on Joe Rogan: hard times make hard men, hard men make good times make soft men make hard times. And it's just the cycle of life. And I'm like,
cycle of life. And it's
cycle of life.
3 generations, and it's incontrovertible. Like, you can't disrupt that because humans are going to human.
Yeah.
Like, we can't stop people like Sam Bankman-Fried.
No.
He can't. Because you can go back in time. P.T. Barnum, right?
Yeah.
I mean,
Madoff.
Madoff, right? There are people who think they're smarter than the rest of us, or that the rest of us are just stupid, or because there's a difference between that, right? Someone could be smart and everyone else could be smart, or just everyone's stupid and you're just average.
Yeah.
But, Madoff was a great example of, he preyed on the one thing we all crave.
What's that?
Inclusion.
Yeah.
We all want to be included. We all want to be liked. The way he worked, this is amazing. And I only know this because I happened to watch it in live.
Yeah.
We had a client that signed up with us when we first started, way back 20 years ago. And they had half their money with Madoff. And we're like, bad. So you got to take some off the table, right? You can't be that concentrated. And he won't meet with us, which is usually not a good sign. So again, I didn't know he was a fraud. I'm not saying I outed him, but I knew we should take money back. And so I'm down at Palm Beach Country Club, happening to be with this guy. And the way it worked, there was a table in the corner, like the Mafia Don.
Yeah.
And Bernie sat in the back, and there were 3 open chairs. And someone in the club, in the Madoff Club, would bring another person who wanted to be in the Madoff Club and sit down.
Right.
And then Bernie would listen to the person make the case why they should be allowed to be in the club. Bernie didn't pitch.
Got it.
They're just like, I want to invest in your 1% a month, please. And this guy, billionaire, suddenly jumps up from the table and says, "Don't you know who I am? You have to let me in." And he had told Madoff that in order for him to invest, his guys had to come do their diligence. And Bernie's like, "You're out."
Really?
And made a public spectacle in front of the whole group. "You're out." And everyone in that room was like, oh, I got to get in. I got to get in.
Yeah.
He was a master of that. And
he knew how to read a room.
Well, he knew how to manipulate, right?
He manipulated a great con. Yeah.
It's a total con because people say that was a hedge fund problem. It was not.
No.
Right? There was no hedge and there was no fund.
No.
He hadn't made a trade in 13 years.
I mean, you listen to the people that work
and there was no fund.
Yeah.
His brother-in-law was transferring the money into his personal account.
Yeah, the accounting department was in a different building that nobody could ever go to. And it was the accounting department. That was the only thing that Bernie could get into. I mean, I know we were speaking before of like not a lot of substance being into things. And there was something I've been actually wanting to get your take on. So like the NFT market, I know that you've dabbled in it. I dabbled in it. Everyone's like, we're back. I mean, all I see right now is a lot of like insider buying and like hot potato again from like insiders. What do you think it's going to take to actually get new people into Web3? And do you even think that it's attainable after the value destruction?
Again, see, unbelievably good questions. So short answer, absolutely.
Yeah.
Right? In the future, everything will be an NFT.
Yes.
All an NFT is a digital property right.
Mm-hmm. Right.
I hate the term NFT, non-fungible token, because people are like, what does non-fungible mean? And what a token is? A token a little thing? A token is an entry on a ledger. It's an entry on a blockchain, permanent, immutable source of truth, replacing trust. Okay. Non-fungible just means it's unique, but that's not what it really is. What it really is it's a digital property right.
Yeah.
Right.
Gives you title to some asset. It can be a monkey JPEG. It can be a beautiful piece of art. It can be one of these Bugatti eggs that now is going on chain using ordinals. It could be my favorite project, right? On-chain monkeys. And the thing is, we have to become invisible.
Mm-hmm.
Technology is only adopted when it's invisible. When the internet came out.
What do you mean by that?
Meaning you don't have to know how it works to use it.
No one knows what an HTTP is.
When the internet came out, in order to use the internet early, you had to be a techie.
Yeah.
You literally had to understand how to set up a computer and type in command lines and use a dial-up modem. And there were no internet service providers. There was no AOL. Then AOL came along. I'm like, okay, I can on AOL, but I still got to know the command lines, and it wasn't a big enough network effect.
And what's this called? The email address,
changed the world. Mark Andreessen made it invisible.
Yeah.
The browser. Oh, I just type in the browser. Oh, it takes me where I want to go. Oh, and then Microsoft stole, good artists borrow, great artists steal. Microsoft stole it and made, embedded in their system. So now we're all dependent on Microsoft, but it was Mark's invention. And the same thing about, Anthony, your experience with this, right?
Yeah.
This made the mobile internet. The mobile internet before the iPhone was available to a very small number of people who really understood how to navigate the web. And remember the first time you put your credit card number on the web?
Yeah.
Like, oh my God, it's going to get stolen.
I had a Nextel phone that had a web browser on it, which was probably like 2004. And I remember looking at it, and then a screen popped up with like two little things that were like pretending to transfer data. And to get anywhere, it took 2 minutes. It took 2 minutes.
Yes.
And that was fast. No. Yeah.
My first computer that I bought from Michael Dell from his dorm room at the University of Texas, which I should have saved as a collector's item, took 3 minutes to boot up.
Yeah.
3 minutes to boot up.
I'll never forget the load screen on AOL. The actual sound effects that used to happen while you were dialing in.
Yeah. And so, but NFTs, look, everything, cookies, right? Cookies that belong to the company will become NFTs that belong to us.
Right.
Like, think about it. All of my browser history, all of my purchase history, why is that owned by someone else? That's mine. That's my asset. If I want to sell that asset to a company to advertise to me, I should get paid. If I want to sell my DNA to Merck, I should get paid, not, Ancestry. So
the world's about to wake up then.
Oh, no. But it has to become invisible. Yeah. If I have to set up a wallet and memorize a seed phrase and No. Look, the early adopters will do it. And that's where we're at. We're at just the knee of the curve of a 30-year S curve. And again, if people have never read The Great Boom Ahead by Harry Dent, you should read it over the weekend and just understand what an S curve is and how it works.
Right.
The rest of his books, I don't really like. And I mean, I like Harry. He's a nice guy.
It's called The Great Boom Ahead.
Yeah, The Great Boom Ahead. It was written in 1991. This is amazing. In 1991. And he predicted two things that are amazing. He said that in 2008, we would have a global financial crisis based on demographics and population. Yeah. Pretty good. Right. In 1991, he said that was going to happen 17 years later. But the bigger one, he said in 2007, the primary method of attaching to the World Wide Web would be a handheld cellular phone.
Wow.
Right.
In 1991, the term World Wide Web was just starting. So the average person didn't even know what it was. Yeah. Cellular phones were not, I mean, they were the brick, right? The $4,000 thing that gave you brain cancer. And so for him to say that was amazing. So he's a seer. He's a great future. But the key was everything was about these S curves.
Right.
And the reason S curves work is because humans are going to human. It turns out, I tell this funny story that, my wife and I have our two older kids. And then when we were 47 and 48, found out she was pregnant. And I tried really hard not to turn 49. Because it turns out being 49 and raising a baby is hard, right?
Yeah.
So I'm like, I'm just not going to turn 49. I'm 60 now. And he's 12. So humans are going to human. And so when you have a lot of under 25-year-olds, your society is not very productive. You have high inflation, because inflation is basically the cost of training young workers.
Right.
Companies borrow from their customers in the form of higher prices to train their workers.
That's a good point.
When you have a lot of 40 to 60-year-olds, it turns out your society is incredibly productive.
Yeah.
Turns out 40 to 65-year-olds, they're pretty good. 65 to 85-year-olds, they don't spend a lot. Yeah. And they're not productive at all, the way we measure productivity. They're perfectly good people, perfectly nice people. But Japan, low productivity, low rates, no inflation.
Mm-hmm.
Shocking, because they have a lot of 65 to 85-year-old people. And here's the thing. Every single day in this country, for the next 11 years, 10,000 people will turn 65.
Yeah.
10,000.
It's a lot.
That's a lot of people, right? Every single day. And so this idea that suddenly we're going to get super productive, no, we're not. 65 to 85-year-old people are not productive. It's just the way it is. And we're not going to be like India, has super high inflation and super high growth, because they have a lot of under 35-year-olds.
Did you see that Google actually just broke ground on their first campus outside of the U.S. in India? It's supposed to be a 3 million square foot. It's supposed to be a 3 million square foot building.
I love it.
It's going to be crazy.
And what's great about that is they'll have the same experience there that I had when I went to the Google campus. I got to speak. This is kind of fun. So I got invited by the Google Investment Club, which is the value investment club, because they're all rich with their stock options. So they invest following Buffett. And it was funny. They prepped me up by taking me to the restaurant, and they're like, our last speaker was Charlie Munger. Like, that's a lot of pressure, guys. That's a lot of pressure. And he said three things: avoid alcohol, women, and bad investments. And I'm like, that's interesting advice from Charlie.
Yeah.
But I got to do this talk, and we're walking across campus, and I say to the guy, so how many people on the campus here down in Mountain View? He says, 25,000. The other guy looks at him and says, dude, there's 40,000.
Yeah.
I said, so within 15,000, you know how many people are on this campus. It's just crazy. Yeah. And so that's what's going to happen in India, and it's going to be big.
It's funny. So, it's like instead of bringing their workers here now, they're bringing the Google machine to them.
Well, and that's another good point, Anthony. Yeah. In that club, and those two guys, both of those were Indian guys.
Yeah.
And of the club, 60% were Indian guys.
I mean, Google's probably got the most H-1B visas. I'd be willing to bet that Google probably has a majority of the H-1B visas in this country.
I think that's probably an accurate statement.
So getting back to the U.S. inflation, there's a lot of people that are getting older within the country. So you think inflation will fix itself because of that, or it's because we're going to have to train a lot of younger people back into the working system?
Again, great question. So one thing we know about demographics is they are certain.
Yeah.
And so you can map out for the next 20 years the working age population growth in this country, and it is a steady decline.
Yeah.
It's a steady decline. And that ain't going to get fixed for at least 20 years. So there's going to be deflationary pressures over the next 20 years. Interest rates are going to fall again. The terminal rate probably is going to look like Japan, back toward that 1%. What people forget is in 2008, Japan said they were going to end their version of QE. It was called QQE, quantitative and qualitative easing. And they were going to stop buying bonds. The Bank of Japan was at about 100% debt to GDP, or debt to GDP was about 100%. And the Bank of Japan owned about 50% of the government bonds. And so we're going to stop. Not so much. Today they're 220% debt to GDP, and the Bank of Japan's balance sheet is like 3x the time. They own 75% of the bonds. So they didn't stop. And so now the Fed, but in 2008, rates went from like 1% to 3%. Instantaneously.
Yeah.
And everybody freaked out and said, oh, they're going to go up. They didn't go up. And so demographics are destiny. And so I think we don't have inflation today. What we have is currency devaluation.
Correct.
That is important.
Correct. I was telling my wife this last week. I go, our house hasn't doubled in price because it's doubled in value. Our house has doubled in price because the dollar's worth 50% less than it was when we bought the house. Yeah.
Yep. And that's exactly what happened. I look, exactly the same thing.
Yeah.
The house didn't get more efficient.
No.
It didn't grow. It actually wore out a little bit.
Correct.
You probably put a little money into it. So
yeah.
But the money got less. The money got worse. And I use gas. So I'm old. Yeah. I remember buying my first gallon of gas when I was 16 years old for 33 cents in Totem Lake in Seattle. And, just paid $4.33.
Mm-hmm.
Same gallon of gas. It does the same thing in the car.
Yeah.
Exactly the same thing. It's like a little less now because it has ethanol in it, but it's the same. Gas didn't get better. The money got worse.
Yeah.
Snickers bar used to be a nickel. Now it's $1.50.
Yeah.
Same Snickers bar. It's actually a little smaller, but still bad for you, but tastes good. But the money got worse. And money getting worse is the goal. See, this is the insidious part that bugs me. Central banks exist for one reason and one reason only: to enrich the people at the top.
Correct.
Mm-hmm.
Right? There's a reason that this is on the back. The all-seeing eye is on the back of our currency.
Correct.
That's not an accident. Right? That was intentionally placed there because the pyramid is what this is all about. Inflation is a tax on the masses to enrich the rich. That's what it is.
So greed has just been fast forward even more so since COVID.
Well, the COVID thing exacerbated it on steroids.
Yeah.
From 1776, Shad, to 1913, $1. And by the way, you guys know why it's called $1?
No.
So the Rothschilds, the wealthiest family in the world, this is a crazy stat. The Rothschild family, now it's a big ass family, a lot of Rothschilds. Single family has as much wealth as the bottom 3/4 of the people on this planet. One family, 6 billion, same wealth. And it's because they invented the first central bank.
Yeah.
In 1607, the Bank of the Netherlands. Now think about this. In the 1500s, the most powerful country in the world was Portugal. There was no America. There was no Central America. There was no South America. There was Portugal. And they were the most powerful country in the world, world reserve currency. Spain takes them over. They're the most powerful country. Then a landmass about the size of Ohio takes over Spain. How did they do that?
Who is that?
How did the Netherlands take over Spain?
Oh.
The Netherlands became the world reserve currency, the most powerful country in the world, because the Rothschilds set up this central bank in 1607, and they literally printed money out of thin air to hire mercenaries to create an army to defeat the Spanish Armada. And they did.
Which is essentially
and that was in 1607.
Yeah.
Which is essentially what we do, printing money and just flying it into
Okay, now wait, it gets better. So this is amazing. It gets really better. So then the French get this Napoleon guy. Turns out he's a pretty good general, and he conquers the Netherlands. So now France has the world reserve currency, superpowers. So half the Rothschilds split and go to the UK, and they set up another bank, Bank of England, and they print a bunch of money, and they fund the adoption of the steam engine, and they have the most powerful navy, and they defeat France. So then the sun never set on the British Empire, and then in 1913, coincidentally, 1913, another thing happened.
That's when the dollar was.
Fed was created.
Yeah.
So back to the reason, why is it called the dollar? Well, in 1776, when we set up the country, we were friendly with the Rothschilds, and the Rijksdollar from the Netherlands.
Okay.
We shortened it to the dollar. That's why it's called the dollar.
Yeah.
So, and it's funny, Reich, Third Reich.
Yeah.
Right. All that kind of stuff. But I'm sure there's no correlation there at all. But so then 1913, we invent the Fed, borrowing the model from the central banks in Europe. So the Fed, remember, is neither federal nor has any reserves.
Yeah.
Right. It's not a bank. It doesn't have deposits. It literally creates money out of thin air. And it's owned by these wealthy families around the world, most of them non-American. And it's like, whoa, I know that's not right. Well, it is. And since 1913, a dollar is now worth 3 cents. And you say, well, why is that bad? They tell us inflation is good for me. If my house goes up, that's good for me. If my salary goes up, that's good for me. Well, if you're rich,
then it is. Yeah.
Yeah, it's good for you. But if you're not rich, if you rent your house, you rent your apartment, and you have a fixed salary, you make minimum wage, and suddenly your money's worth less, how is that good for you?
Right.
That's theft from the masses to the few. And from 1913 to today, we went from reasonable income and wealth inequality to the highest wealth and income inequality in the history of mankind.
I know.
And
so we're living in times of theft right now, is what you're saying.
Yeah. And here's the thing. People say, if you hate America so much, why don't you move? I don't hate America. Are you joking? I hate the corruption at the top. I hate that we're laundering money in Ukraine and Israel. I hate that, right?
Oh, you can't call it money laundering, though.
Oh, I can. Yeah. I do. And people say you can't say that because the black hats are going to show up. I'm like, bring it. Like,
I mean, not a lot of people are talking about how the M1 money supply right now is at the lowest point it's been in a very long time.
No, but Shad, to your point. So what happened is from 1776 to 2020, there were $10 trillion created. Yeah. From 2020 to 2022, there's another $10 trillion.
Think about
because of this idiot woman, and I shouldn't say she's an idiot, but she is an idiot, Stephanie Kelton, convinced the Democratic Party leaders that MMT was legitimate science, right? That modern monetary theory, which is the idea that as long as you're the world reserve currency, you can print as much money as you want with no impact. You can spend as much money as you want, have as big a deficit as you want with no impact. I'm like, look, Steph, if creating wealth was as simple as printing money, wouldn't everyone do that?
So let me ask you, Mark,
wouldn't you?
Where is America 10 years from now?
It's a great question. So a couple things. One, democracy is the worst form of government except for all the others. So we got that going for us. America itself is a happy accident. Yeah. Right? We have no shared borders with anybody of substance. And that's not criticizing Mexico or Canada, but they're not militarily going to take us over.
We're kind of lucky in that regard.
No, totally lucky. Yeah. Totally lucky. We also have massive natural resources because we have a large land mass. Yeah. And it's diverse. Okay. So we have all of these things going for us. Now, we also have world reserve currency status for now. Now, China wants it. So 10 years is kind of tricky. China has a 30-year plan. Yeah. From 2020 to 2050. So from 1990 to 2020, China had a plan they wanted to have what was called a harmonious rise to become a moderately prosperous socialism economy. Now, harmonious rise, that sounds kind of nice. That doesn't sound very threatening. That's good. Kumbaya. And what did they do? They achieved the greatest achievement in human history. They lifted 700 million people out of abject poverty into the middle class.
Do you not think, though, that they've got major problems right now as far as their current?
Of course they have problems. Okay. Everyone has problems. Yeah. But everyone has problems. But that single feat is the most amazing feat in human history. Yeah, 700 million people.
They're what, a third world country?
Destitute profit. Yeah. Because remember, China for 1,800 years was the superpower. Yeah. The Silk Road, right? The dynasties, all of that was China, and India too, but China. Okay. US didn't even exist for most of that. Yeah. China was the superpower. And then the center of gravity shifted to Europe, and it got all the way to Nova Scotia. Like today it's at Nova Scotia, and now it's going back. Okay. And so from 1990 to 2020, harmonious rise, not threatening, no problem. Yeah. In 2020, they're like, now we want to be a superpower. Yep. We want to be a prosperous socialism economy, not a moderately prosperous, but a prosperous socialism economy. And that basically means they want to have the reserve currency. So now they have a reserve currency as part of the SDR. Yep. They want to have the reserve currency. They want to be the dominant superpower. They want to win. And so what did they do? 10 years ago-ish, 10, 15, technology was starting to boom. And we made a decision I always joke, we made a decision in the US to be the best in the world at social media. I mean, we are awesome at Facebook and Instagram, and we rock. China decided to be the best at 5G and AI. Yeah. They have 96% of AI citations. And we're like, no, ChatGPT. ChatGPT is nice. It's a nice little tool. But
they've got all the data. I mean, they're whooping our ass.
They've got the data. They'll be the first to have truly autonomous driving. Look,
I forget the author, but there's a book, AI Superpowers, that's great. It goes over everything. China's killing us in the data.
And here's the reason. In America, we graduate 450,000 STEM engineers every year. Yeah. Good for us. It's awesome. Okay. They graduate 4.5 million. Yeah. Every single year.
So then do the numbers then. What happens? Maybe
to answer your question. So China's going to continue to ascend. Now, we are in Cold War 2.0 and we're propagandizing them and they're doing TikTok to us. And so there's a war going on. Fine. Yeah. Yeah. But here's the thing. China also figured out that if you go back to that history I told you about Portugal, Spain, Netherlands, France, UK, US, the world reserve currency was secured by the threat of violence through naval superiority.
Correct, which is why they've got 350 naval ships that they've built in the last 15 years.
But that's important. Yeah. That is important. And the South China Sea is important. Yeah. But they also figured out the next war is not a kinetic war.
Space. Oh,
the
cyber.
Next war is a cyber. Yeah. They realized that chips were more important than ships. Yeah. So what is all of their focus on? Yeah. Chips. It's all about chips. And chips, which is one of our investment theses, turned out to be a really big deal. Yeah. So the next 20 years, and the next 10 years, what's going to happen is China is going to ascend on technological superiority. Okay. We're going to try to keep up. We still have more innovation. Like Silicon Valley is still amazing for innovation, but it's going to be a tight race. In 10 years, I think we're still in the lead. Yeah. But they're right on our heels. In 20 years, I think they pass us. And in 50 years, I think we have a global metaverse where we don't really have nation states kind of the way we all think about them.
That'd be great. I'm all for that. I mean, we'd be prospering to a much higher degree if we'd all just be able to get along. I mean,
look,
granted, it's never going to happen. But
it's not going to happen over time. And people say, Mark, there's no way this is going to happen because governments are not going to give up the threat of violence. They're not going to give up their currencies. Like, well, they may not get
a choice. Yeah. There's going to be an existential threat at some point.
I think it's important to always remember the way you're brought up is what's normal to you later in life. And when you go from one generation to the next, which we think is normal, is not going to be normal for future generations. It's just,
it's the Chad, right there. So I have 3 grandkids, 1, 3, and 5. My youngest is a Gen A, right? She's a Gen Alpha. She will never have one of these.
Right.
No.
She will never have a leather wallet. She will never spend paper money. She won't have any concept of anything but digital. She will not drive a car. She'll be driven autonomously. She'll never take a plastic card and put it in a machine. The car will pay the machine.
Yeah.
When she's driving down the highway and she says, I want to go faster than everybody else.
Yeah.
So pay for Waze Premium, which routes me the better way and sends everyone else the slow way. That's going to happen. Those micropayments are not going to be with cash.
Yeah.
They'll be on the blockchain.
They're going to be with cryptocurrency and blockchain.
Yeah.
And here's the thing. Blockchains will replace all of the technology up to this point. There'll be no more COBOL systems. There'll be no more Fortran systems. There'll be no more C++ systems. It will all be blockchains. And that's not a criticism of the old tech. It's evolution.
Yeah.
Adapt or die.
I mean, JP Morgan launched the blockchain, I think, a month ago. They're using it for collateral, for collateral and transactions.
Yeah. Evo Corp.
Yeah.
And if you haven't watched the show, Mr. Robot,
it's a great show.
It's so brutal.
Yeah.
I mean, I can't watch parts of it because just the gratuitous violence and
I loved it.
But
I thought it was a great show.
The writing was amazing. And if I had watched it in real time, I'd be way wealthier because I would have bought so much Bitcoin in 2017 if I had watched that in real time instead of watching it last year. It's so well done. But Evo Corp is JP Morgan.
Correct.
And Evo Coin is JP Morgan Coin.
Right.
And why Bitcoin is superior to that and why all the other things that are being built around the ecosystem to make sure that we don't have a single currency like Evo Coin or JP Morgan Coin or central bank digital currencies.
That's even worse.
I mean,
that's even worse.
It's totally worse.
Yeah. I think
if you haven't seen the Augustin Karstens or whatever his name is, the giant guy. I used to call him Jabba the Hutt, but he really looked more like the Kingpin guy from Spider-Man.
Yeah.
He's the head of the BIS. There's a 1:47 clip of him talking about why, of course, we should control how you spend your money.
Correct. What's his name? Klaus, whatever, the WEF.
Well, there's Klaus Schwab of the WEF,
Schwab.
but this guy, Augustin Karstens, is the head of the BIS, which is part of that whole.
Yeah.
Look, you want to have some fun this weekend. Google when WEF was incorporated. Okay. Google who was president in the United States then. Google what that president did to the gold window. Google what happened to gold 4 years later.
Wasn't it Nixon that outlawed gold?
Yeah. Amen.
Yeah.
You're good.
Yeah.
You're good. You know your history.
Yeah.
So there are no coincidences.
No.
Right?
None.
It's not a coincidence that WEF global leaders now run France,
correct,
Canada, New Zealand, all the places that did lockdowns and censorship. And look, I shouldn't disparage him because I don't know him, but now they're talking that Gavin's going to step in for Joe. Gavin's a WEF guy too.
I think Gavin's evil. I mean, I think Gavin Newsom is evil.
Look, I mean,
Tucker Carlson had some pretty alarming stuff to say though recently.
The WEF is.
That's why I didn't like. That's why I hated Linda Yaccarino that Elon Musk put as CEO of Twitter. She was in the WEF. She was in WEF for a while.
Of course.
Yeah.
Hey, don't dig too deeply on Peter and Elon.
Yeah.
And their connections to.
You mean Peter Thiel?
Mm-hmm.
Oh, I know. I've read a lot about Thiel.
What do you mean?
Yeah.
Like, elaborate on that. Peter Thiel and Elon Musk's connection.
Let's just say there are no accidents in this world.
Correct.
You know who Bill Gates' aunt is?
Who?
Board member of the WEF. So because there was a computer system called CPM that was my original operating system, never crashed, far superior to DOS, but DOS got picked by IBM. Funny how that works.
Yeah. It's
like there are no accidents.
No.
And if you dig into
who's on the ballot 12 months from now?
It probably is going to be Gavin. I think Joe's going to step away, and so it's probably Gavin, because it ain't going to be Kamala.
No.
And it's whoever George wants, right? At the end of the day, on the Democratic side, it's whoever George wants. On the other side, I think it's the Trumpster. I think there are a lot of people still love him. Look, I live in North Carolina.
I bet somebody last week it's going to be Trump Newsom 2024.
And
does Donald Trump, well, if that's the case, then Donald Trump's going to get reelected.
Did you not watch that debate last night?
I didn't see it yet.
He's going to steamroll all of them.
Yeah, I know.
Like it's not even fair.
So does Donald Trump get reelected?
I think
define reelected. Reelected. Does he win the election? I don't know. Does he get to be president? I don't know. Probably not.
Yeah.
But here's the thing.
But do you think that Gavin Newsom could beat Donald Trump in a presidential? I think Donald Trump, if it's up to the people, he's reelected, becomes the president of the United States.
No, but remember, it is up to the people to a point. I mean, we have the electoral college system.
Yeah, true.
It's antiquated and probably needs to go. And I know, it's just part, and the framers frame. Well, okay. So this reminds. I'm gonna let you go after this. So when my daughter was in 9th grade, she wrote her first paper, right? And we got it back. She got it back. So obviously I might have helped her with this paper, and I thought it was awesome, right? And it was about the Boston Tea Party. And yep. And
you got to run.
I do. So about Boston Tea Party, and she gets it back. It's covered with red ink. Like, whoa, what? And the guy wrote back saying, so a bunch of landed gentry that don't want to pay their taxes went out and destroyed a bunch of other people's property. You think that's a good thing? That is not what happened.
Yeah.
Okay. Yeah, that is what happened. And no, that's not right. Okay. So I had a different lens than what I had read in history, and history is written by the winners.
Gotcha.
And so the challenge of history is written by the winners is, I don't know if, so my point is the framers, right? They set up the electoral college because they were landed gentry.
Yeah.
And they thought they were smarter than the people who were illiterate. And at that time, yes, that was true. And it wasn't like prejudiced, and it wasn't racist. It was just true.
It's the truth.
Now that everybody's educated,
it's the opposite now, pretty much.
It's probably not appropriate,
Yeah.
and we probably could get rid of it, and that wouldn't be going against the founding fathers, who, by the way, were children. We have to remember that too. Right? They were not exactly wizened, people. Yeah, they're great, amazing. We had the best country in the world, all that good stuff. But we could change some things as the world evolves. So, but if the electoral college is still around, I think it's tough to beat. You know, but who knows?
I'll let you run, but I think, when you just mentioned it there, it's tough for people to adapt in America when you built the world's greatest economy. And I think that's where we are right now. And you got to adapt with the times, right? But as you said all along, there's scammers out there in the past. You can't change them. You just have to go through the whole process. But most important thing, I love chatting with you. You and Anthony obviously are a wealth of knowledge in the crypto space. But listen, let's keep in touch, and love to have you on again sometime soon again, okay?
Right. Thanks, guys.
Yeah,
really enjoyed it.
This was great.
Talk to you soon.
Take care.
Bye.
Hey everyone, thanks for watching. We appreciate all your feedback. So if you want to leave some comments, let us know what you think and what you want to learn of. Subscribe to our channel by clicking here. If you want to see more videos like this, then click here, because at the end of the day, we would not be here without you. Thanks for watching, everyone.